businesses you have to worry about, I mean, an airline business is a good case. In airlines, you just have to keep spending money like crazy, and you have to spend money like crazy if it's attractive to spend money, and you have to spend it the same way if it's unattractive. It's part of the game. Even in our textile business, to stay competitive, we would have needed to spend substantial money without any necessary, any clear prospects of making any money when we got through spending it. And those are real traps, those kind of businesses, and they may work out one way or another, but they're dangerous. And in a See's Candy, we would love to be able to spend $10 million, $100 million, $500 million and get anything like the returns we've gotten in the past. But there aren't good ways to do it, unfortunately. We'll keep looking. But it's not a business where capital produces the profits. Flight safety capital produces the profits. You need more simulators as you go along, and more pilots are to be trained, and so capital is required to produce profits. But it's just not the case at See's. And at Coca-Cola, particularly when new markets come along, the Chinas of the world, or East Germany or something of the sort, the Coca-Cola company itself would frequently make the investments needed to build up the bottling infrastructure to rapidly capitalize on those markets, the old Soviet Union. So those are expenditure. You don't even make the calculation on them. You just know you've got to do it. You've got a wonderful business, and you want to have it spread worldwide, and you want to capitalize on it to its fullest. And you can make a return on investment calculation, but as far as I'm concerned, it's a waste of time, because you're going to do it anyway. And you want to dominate those markets over time. And eventually, you'll probably fold those investments into other bottling systems as the market gets developed. But you don't want to wait for conventional bottlers to do it. You want to be there. One of the ironies, incidentally, it might get a kick out of some of the older members of the audience, that when the Berlin Wall went down and Coke was there that day with Coca-Cola for East Germany, that Coke came from the bottling plant at Dunkirk. So there was a certain poetic irony there. Charlie, do you have anything on that?
I've heard Warren say since very early in his life that the difference between a good business and a bad business is usually that a good business just throws up one easy decision after another, whereas the bad business gives you a horrible choice where the decision is hard to make. And is this really going to work? Is it worth the money? If you want a system for determining which is a good business and which is a bad business, just see which one is throwing the management bloopers time after time after time. Easy decisions. It's not very hard for us to decide to open a new See's store in a new shopping center in California that's obviously going to succeed. It's a blooper. On the other hand, there are plenty of businesses where the decisions that come across your desk are just awful. And those businesses, by and large, don't work very well.
I've been on the board of Coke now for 10 years, and we've had project after project come up, and there's always an ROI, but it doesn't really make much difference to me, because in the end, almost any decision you make that solidifies and extends the dominance of Coke around the world in an industry that's growing by a significant percentage and which has great inherent underlying profitability, the decisions are going to be right. And you've got people there that will execute them well.
You're saying you get blooper after blooper.
Yeah. And then Charlie and I sat on U.S. Air, and the decisions would come along, and it would be a question of, do you buy the Eastern shuttle or whatever it may be, and you're running out of money, and yet to play the game and to keep the traffic flows such as with connecting passengers and everything, you just have to continually make these decisions, whether you spend $100 million more on some airport, and they're agony, because again, you don't have any real choice, but you also don't have any real conviction that it's going to translate, that those choices are going to, or lack of choices, are going to translate themselves into real money later on. So one game is just forcing you to push more money into the table with no idea of what kind of a hand you hold. And the other one, you get a chance to push more money in, knowing that you've got a winning hand all the way. Charlie? Why'd we buy US Air? Could have bought more Coke. Area 7.
My name is Bakul Patel. I am from upstate New York. My question is Berkshire prepared for 1929 style of depression or like a prolonged bear market that exists in Japan? 1929 style of depression or like a prolonged bear market that exists in Japan?
Well, we don't expect what you're talking about, but we're probably about as well prepared as any company can be for adversity because Berkshire has been built to last. Net, we would benefit over a 20-year period by having some periods of terrible markets periodically in that 20-year period. That doesn't mean we're wishing for them, and it doesn't mean they're going to happen. But we make our money by allocating capital well, and the lower the general stock market would be, the better we can allocate capital. So we're well prepared, but we're not necessarily expecting. Charlie?
Yeah, we are not going to ever sell everything and go to cash and wait for the crash so we can go back in. On the other hand, we are structured so that I think net a lot of turmoil in the next 20 years will help us, not hurt us. I don't mean it'll be pleasant to go through the down cycle, but it's part of the game.
Area 8.
My name is Pete Banner from Boulder, Colorado. First of all, Mr. Buffett and Mr. Munger, thank you for your genuine generosity today. Berkshire closed yesterday. The A share was about, for Friday, $69,000, and the B share was about $2,300. Do you feel that price is grossly overpriced or grossly underpriced or reasonably priced?
Well, I'll let Charlie answer that one.
I'm not going to say.
No, we're just never going to give out advice on Berkshire stock. There's no, that is up to people who want to buy and sell it, and anything we would say could easily get magnified, and people would be acting on it months later, and who knows all the problems that it could produce. So
it would be quite eccentric if we were to every day put out an announcement, now's the time to buy, now's the time to sell our own stock. Eccentric we are, but that eccentric we aren't.
Area 9.
I'm Irene Finster, your longtime partner from Tulsa, Oklahoma.
Hi, Irene. Yeah, Irene has a soda fountain. You ought to go visit her.
First, I want to thank you for giving your shareholders the opportunity to select their own charities. And second, I'm very concerned about your health due to your diet of red meat.
Irene, these are our products that I'm eating.
red meat, candy, ice cream,
and that's just what I do. That's what I do in public.
And Cokes. And I want to know what your doctor says.
My doctor says I must be heavily relying on my genes. Now, I will tell you, I mean, Charlie and I are both very helpful. If you were in the life insurance business, you would be happy to write us at standard rates, I can assure you.
They asked George Burns when he was 95, what does your doctor say about smoking these big black cigars? And he said, my doctor's dead.
Charlie and I played bridge with George when he was about 97, I'd say, at the Hillcrest Country Club, and there was a big sign behind him that said, no smoking by anyone under 95. And actually, at his 95th birthday party, he had about 5 very good-looking young girls that were there to greet him with a big cake and everything, and he looked them over one after another, and he said, oh, girls, He said, I'm 95. One of you is going to have to come back tomorrow. We're very big on George Burns in recent years.
Yvonne Edmonds from Cedar Mountain, North Carolina. I have a specific question, but not a trivial one. You regularly compare Berkshire Hathaway's performance to the S&P 500, which is very helpful and very interesting. But I haven't seen a correlation coefficient between the S&P 500 daily, from day to day performance, close, say, and Berkshire Hathaway's close. Now, it so happens for me, and I'm sure some other people in the audience, that I don't always have access to newspapers, or the internet for that matter, newspapers that publish Berkshire Hathaway performance on a daily basis, or even a weekly basis for that matter, or a monthly basis. It would be very helpful to know the extent of a correlation coefficient between those two variables. If you have that, would you let us know what it is? And if you don't, would you please consider calculating it in the future?
Well, it could be calculated, but I don't think it would have much meaning. I mean, it would be an historical correlation coefficient, which, I would be very reluctant to have people place any weight in. I try to indicate even the limitations of the yearly comparison of the relative performance, because what was doable by us in the past is not doable today. I mentioned in my annual report the best decade I ever had on comparative performance by far was the 50s. Now, I don't think it was because I was a lot smarter then. I'm unwilling to accept that. But, I had some edge of, there's probably 40 plus points per year. But I was working with it. That has no relevance to today whatsoever. It would be misleading to publish it or to make calculations based on it. So I think that you would find, I don't know what you'd find on a specific correlation between Berkshire and the S&P. You'd find a lot of correlation. Well, you might not find so much even. You'd find it in intrinsic value between that and Coke and a few stocks like that. But I don't really think that's particularly useful information going forward. We'd have no objection if anybody wants to make the calculation, but it wouldn't be something that would be of any utility to us. And if we don't think it's of utility to us, we don't want to put it out for shareholders as being a possible utility. We do think that the S&P annual calculation has some meaning because it's an alternative for people to invest. They don't need us to buy the S&P. So unless over time we have some advantage over that, what are we contributing? What value is added by our management? So we think that people should hold us accountable, even though we would prefer not to be, because it is a tough comparison for us as a tax-paying entity against the pre-tax calculation on the S&P. But we don't pay any attention to beta or any of that sort of thing. It just doesn't mean anything to us. We're only interested in price and value, and that's what we're focusing on all the time. And any kind of market movements or anything don't mean anything. I don't know what Berkshire is selling for today, and it really makes no difference. It just doesn't make any difference. What does count is where it is 10 years from now. And I can't tell you what it was selling for on May 4th, 1983, or May 4th, 1986. So I don't care what it sells for on May 4th, 1998. I do care, where it is in general 10 years from now, and that's where all the focus is. Charlie?
Yeah, we're publishing data in the form where we would like it if we were the passive shareholder. And so you're getting the data and you're getting it on a time schedule based on what we would want if we were in your position. And we don't think the correlation coefficients would help us.
We don't think anything that relates either to volume, price action, relative strength, any of that sort of thing bear in mind, and when I was in my teens, I used to eat that stuff up. I mean, I was making calculations based on it all the time and kept charts on it, even wrote an article or two on it. But it just has no place in the operation now.
One of the pleasant things about dealing with Warren all these years is he's never talked about a correlation coefficient. If the correlation isn't so extreme you can see it with the naked eye, he doesn't compute it.